This is my market update for the week ending Friday, September 18th, 2015. So in front of you, it's a daily chart of the SPY ETF. You can see markets broke out of that triangle pattern earlier in the week, only to meet resistance at that descending 30-day moving average. There was some follow-through selling today on Friday. Look like markets are going to be down, or they are down around 2% lower. They found some support at the basically the descending trend line that I've drawn. Next week will be interesting to see how markets react, whether selling continues or we find a bottom here and resume higher. Next up, it's a weekly chart of the SPY ETF. So you can see it's just the last bar I'm talking about. You can see markets broke out of that triangle and only to meet resistance by the red line. So that's the 10-week descending moving average. And you can see based on this longer term view, the red line, the 10-week moving average, it's below the mauve line, which corresponds to the 30-week moving average. So this is, you would expect bearish conditions to persist over the intermediate term. Certainly, we saw basically a 12% correction from the highs. It's probably reasonable to expect that we're not going to immediately, V-shape to all-time highs, especially not for the overall market. I would expect at least some more consolidation here, and perhaps even a retest of the lows we saw in late August. Okay, there's one addition to my portfolio this week. It was a CBM. It's a small cap biotech stock. In front of you, it's a weekly chart. So I basically entered into this position upon the break of the red line. It's basically which corresponds to the 10-week moving average. So we broke out of that, as well as the triangle pattern that was forming. And so a decent gain up until Friday. I think at the highs this week, the position was up about 5%, and unfortunately on Friday it sold off around 4% lower. So we'll see if this position survives any market declines that might occur in the future. I think it's important to basically just stay disciplined with your position sizing and your trading strategy, and not make too many changes, especially with the increased volatility. So the next trade that I want to discuss, it's AFSI. I talked about this in last week's video, just to provide a quick update. So basically, the idea for entry was, if the stock traded above the red line or the 10 daily EMA, that would trigger my entry. So we got that signal. So I got in around 58, and this is week 2 of the trade. Currently up between 5 and 6%. It's interesting if you take a look at the monthly chart as well. Basically, the end of August we had traded below the 10-month moving average, and from September onward, actually pushed above the 10-month moving average. So that could be considered a sort of a long-term buy signal as well. So we got basically a buy signal on both the daily and the monthly charts. So that probably explains, why this position is experiencing a bit of success over the last few weeks. Thanks for listening, and if you like what you hear, you can follow me on Twitter at DeconstructMad, where I post all my trade ideas as well as entries and exits.